I want you to kind of, first of all, explore with the audience that point about if you're going to go for something that's alternative, it has to be something that almost has a structural reason for it to be different.
Exactly. So thanks for teeing me up there. That's exactly where I wanted to go, which is that if you said, so let's take something like Bitcoin, right? We mentioned it a moment ago. You're long stocks and you're long Bitcoin. Now, and you're long gold. Now, when people want to sell equities because they're getting nervous about the performance of equities or they think equities are too expensive, they will say, well, where else can we put our money? Maybe we want to put it into fixed income. But then if you're worried about the economy and stock price, maybe you're worried about getting paid back on those bonds. You don't want that either. And so you say, well, I need something else. And that something else historically was gold. So you would buy gold. You would see stocks coming down. You'd see gold going up. Now you've got Bitcoin, which is like a digital gold. I mean, everyone's got a different view. My view is just simply it's a store of value. It's now big enough and established enough and liquid enough that it does have that characteristic. So it's a little bit like holding gold in a digital format. And so you should start to see Bitcoin going up when stocks go off. But of course, when people get nervous about stocks and they feel like they need to trim their risk, they also look at Bitcoin as risk and trim that as well. And so we're not seeing the real benefits. It's still, I own some. It's a good thing to have as part of a diversified portfolio, but it's not really doing that diversification thing that we want it to do because there's no structural reason to really hold it. Same goes for gold. So why do I really like carbon? Well, high level, it's got a 0.3 correlation, global carbon, 0.3 correlation to US equities, incredibly low. And when you look at the forecasts and the demand supply, but compliance carbon, you've got a very high potential upside. And it looks something like double the risk of equities, but double the returns with a 0.3 correlation. And that is a very magical blend of characteristics for something to put into a portfolio with your gold, with your bonds, with your equities.